You will never have financial freedom if you do not understand the concepts in this video and some of the keys at the end on how to act on these concepts. Our entire company is built around showing people how to achieve financial freedom using passive cash flow. And although the way of doing that may have changed a lot in the last 25 years, the general principles have not. And if you look at the book written 25 years ago by Robert Kiyosaki called Cash Flow Quadrants, it's got some amazing principles that still hold true today on how to understand passive cash flow. First of all, it starts with a very simple quadrant. And here are the four components of that quadrant. And the first one is E. That's employee. What that means is that your money comes from your job. You have a job. Second is S. That means self-employed, which means you own a job. Third is B. That means you own a business, which means you own a system that works for you. And lastly is I. I, that means you've got investments. That means your money works for you. Those are the four components of the cash flow quadrant. Each of these categories are based on where the cash flow comes from. And so understanding them is very important because the only way to have financial freedom is to have cash flow. So it's important to understand each of these four categories and where your money is coming from, and most importantly, how to move from one category to another. Most people start with all of their cash flow coming from a job. Their entire cash flow is based on their E. The goal is to get to the point where all of your money is coming from passive cash flow, which is mostly I, but it could be from B as well. So let's talk about each of those in a little bit more detail. So E means being an employee. That means you have a job, whether it's full or part-time, whether it is a W-2 or a 1099 job, that doesn't matter. But you get paid for your time or you get paid for your results. And your efforts contribute to somebody else's business. So for most people, this is their only source of cash flow. Second one is self-employed. That's the S. That means that you own a job. You could be an accountant, an attorney, or maybe you own a small business. But either way, there's a business that is working and generating some revenue. And so you're not directly reporting to somebody else. You may have people that are reporting to you, but you may have employees, but the success of the company depends on you, okay? You're self-employed, you own the entity, and you get cash flow from it, but it can't function unless you are working. Number three is a business owner. That's the B. That means you have a system that works for you. So that means that you may be a leader who's delegated different responsibilities to other people. And so there are other people working to generate money for the business so that you don't have to. And lastly, again, it's the I. That means investors. That means your money is working for you. So the people in this category, they have money, and that money works to make more money. So one of the most important distinctions in these four quadrants is understanding the difference between a self-employed person who's an F and a business who's a B. So if you have a lawn mowing business and it's just you, that's an S. You're self-employed. You have a business, but it can't make money unless you're doing the job. Okay, that is entirely dependent on you and your time and your effort. So if you have a business that cannot function without you, you have a job that you've owned, that you essentially own. Now, if you have a business, it is something that can function without you. You put systems and processes in place. You've got people in place. You've got automation. And if you step away for a day, a week, or a month, it's not going to change anything. The business will keep on running without you. That's a business. And that's why Robert Kiyosaki talks about two of these things, the investments and the business being passive, whereas the employee and the small business owner are active. So understanding the distinction between the small business and the self-employed and the business is very important. Another analogy that Robert Kiyosaki uses in the books is he calls everything a system. And in the overall system, E works for the system, S is the system, B creates, owns, and controls the system, and I invests money into the system. So just another way of looking at the four quadrants and the overall business system. So one of the things you want to be able to do is move through those systems. Okay? If you are stuck as an employee your entire life, you may have good cash flow, but you'll never be financially free. Okay, you've got to be able to move to the point where you've got income coming from the B and or the I, where it's passive cash flow coming in, so you've got financial freedom. The challenge is that a lot of people don't know how to get out of that E category. So honestly, my wife falls into somewhat to that category. She is an employee. And as she puts it, I'd rather be a worker bee than a queen. She doesn't really want to manage. She doesn't want to own a business. She doesn't want to be self-employed. And so she wants to be an employee. It's a comfort level where you're comfortable as an employee and you don't want to take on the added responsibility of being self-employed or a business owner. And that's fine. If that's the case, then that means the only way you can achieve financial freedom to become an I. So you will go essentially from an employee to an investor. And that is the only two sources of cash flow you'll get because those are the two things you're comfortable with. So if that's the case, it's important just to understand that. Now, for a lot of people, they start off as an E and they get a little bit more adventurous. They say, you know what? Yeah, I'm an employee. Man, maybe I want to try this on my own. And so they've got a more independence about it. And they go out and they start their own business. And that's great. So they own a small business. They move from E to S. So now they're self-employed. They got a small business and they're generating cash flow. That's great. But again, now they own a job. And there are millions upon millions of small businesses in America that fall into this category. Some are just simple side hustles, whereas others are full-time, have maybe even multiple offices. But they were all started by somebody who wanted independence from their E job. Most of those small businesses remain an S forever. But a few of those small businesses do eventually implement the systems and processes to automate things so the business can run itself. And that's when someone can move from the S quadrant over to the B quadrant, from the active cash flow coming in to passive cash flow coming in. And that's a huge step. It does take a lot of work, a lot of effort to put in those systems and processes and automate, but it's well worth it because now you have passive cash flow. And that's how you move from the S to the B category. Now, the other category is I, and it's not necessarily the next step after a B, but it is something that you just need to understand where it fits. Again, just a position where you've just invested in assets with any money that you have, and eventually you build that I big enough that you've got passive cash flow. And that could be with stocks, real estate, pretty much anything else that generates passive cash flow. So why is all this so important? The only way for you to ever have financial freedom is to have enough passive cash flow coming from the B quadrant. If you don't have that passive cash flow, you cannot be financially independent. And so to have a plan that's going to get you from where you are to that position, that's what you need to do. That's how you create a plan to achieve financial freedom. So there's usually two paths people can take to get. One is they're an employee and they're going to remain. They don't want to start a business. That's fine. Then they just need to invest a lot of money into the investments to grow that quadrant enough that can take care of it. Without me around, that would have been my wife's plan. Just keep working, keep investing, and that's okay. Eventually, you'll have enough money in the I quadrant that you've got passive cash flow to live. Now, the other approach is to say, hey, yeah, I may be an employee now, but I want to start a side hustle or a side business where now I'm self-employed, and then maybe I can automate that business, grow that business, and turn that into a B, and that's going to generate a lot of passive cash flow. There's nothing wrong with either of those paths, whether you want to go from an E to an I, or E to a small business, S to a B. Those are both fine. You need to understand which path you're on and how to get it. So basically, that's one of the things our program does. We help people create a plan to get from wherever they are to financial freedom. So I encourage you to take a financial freedom fast track program and see if maybe we can help you get through those quadrants so you've got financial freedom.